All right, we're going to start with the weeklies just to kind of put things in perspective. And you see how we've had the uptrend of series of higher lows going on. And now we come into this last pivot that I was explaining to for the last week, saying, okay, I usually like to see the retracements, and if they become 50% or something like that, that's fine. 50% into the retracement, I'm in going long on a higher low. Okay. And that's pretty much the deepest I let it go is like 62%, maybe depending on the price action, stuff like that. But again, it's not based on a moving average, it's based on what the price action is telling me. Because I find that, again, my personal handicap with moving averages, I end up staring at them like a snake charmer, or I'm like the guy that, you ever seen a guy on the streets who uses the three, those three cups and keeps you staring at him, staring at him, staring at him versus seeing what's actually going on behind him? Those moving averages for me, in a weird way, I end up looking at them versus the price action. I always want to look at the price action first, and if I want to pop on a moving average after I make my assessment based on the price action, I will. This dip is 100% in, so that means I'm not going to try to buy this dip. Okay, you haven't had a higher low as yet, so I wouldn't buy this dip. And if it's 100% retracement in it, that means that it's come back in. It's ended up creeping back in. It broke to new highs, squeezed out again. Another why I don't trade the breakout. Squeezed the breakout, guys, and now it's rolling back in to the upside. If we look at the daily, you can see it was pretty grimy actually, but again, I want to get this dip here based on this retracement here. A lot of people will not take that, wait for the tops. I don't do that. I used to, but I don't. Now we know that this is 100% retracement. We have to wait and see who's going to win this battle on the S&P 500. But this is not the dip that you want to buy. Again, if you got caught here and here, that is fine. That is trading, and that is what's going to happen sometimes because you don't know. I mean, it looked like a good retracement. This probably was a little bit deep, probably 62, almost 80%. But you buy it, and if it came above, maybe you rolled your stop to break even or something, it broke back down, then you started getting this huge volatility. It kind of is a list of everybody wants to sound like, oh, I want to be the guy that's riding the Bronco. I want to see the guy get bucked off the damn Bronco get tired, show me what direction he's going to do, and then I'll get back there and run behind it with the clowns. I'm not trying to be the cowboy. So if this is the action that you like, hopefully it's on an intraday versus swing trading basis. Let's look at the QQQ. Again, let's go back. You see that we're now, this was a pivot that I wanted to hold, and it didn't. So you take that one out, and you can see now that it's coming close to this previous pivot. It still hasn't taken it out as yet. But again, you see the price action, and this retracement's a little bit too deep for me to actually buy into. And again, it probably is almost 100 to 80 to 100% retracement. So I'm not going to buy that. Okay, and I haven't got a higher low yet. So I'm not the guy that's saying, oh, screaming, let me buy here, because it could just continue to go down. At least I want a higher low or something like that on to give me some type of signal to get in. Okay, from the daily aspect, some guys will say, listen, I got some money, but off the breakout, ha ha ha, you're a loser. Okay, whatever. I just know that trading breakouts, you have to almost scalp it, because it's it could come back in, and God knows there's a reason why you see these things on IBD and you see them on a lot of things. I think they want to push that information out to the masses because they know it doesn't take but a little bit of movement to shake people out. But with that being said, you see that this price actually started not following through. It started creeping through. Now it's starting to grind down. I don't know if that means the weakness from the bears to push it down. But what I will tell you is that again, the retracement's too deep from where I wanted to get it in. So again, if you got stopped here and here, that's a trade that you didn't know what was going to go on, and if you stopped below there and you got stopped out, there's nothing wrong with that. Okay, so don't harp on yourself like I should have known or this or that. It's fine. You have the Russell. We look at the IWM, so we can kind of look at some of the volume. We see that we've been talking about these lower highs as well, and off the weekly, this one has broken down. So again, you want it to break down, and let's see if it can retrace up to here. The volume lighten up on the green bars. Just like you see the volume as it was going higher, the volume was decreasing. And I told you when we start, and this is something kind of educational if you guys want to look at it, when it was retracing, I like to see volume like this. Okay, it means that there's not much power. And when it comes to a pivot point or potential pivot point, breaks the low, I want to see the volume go up like that. That's good. And you could invert this chart and keep the volume the same. That's why I like to look at volume. Okay, it's not really too much uh, going on regarding that. You have the diamond, excuse me, diamond. Again, the higher lows are in place, but again, this is something you have to be cautious with because I think this is around 80% for the retracement. Again, I have these marked out that if this was a good pivot point, which it looked like it was, but we didn't know what was going on here. It looked like it was, and then you take it, and then you get stopped out. It's pretty much a very simplistic way to put it, and it's a part of the business. So if you feel like, oh, I don't want to get stopped out, pick something else to do with your money, because this is not that type of thing where 50%, 60% is perfection. Okay, if you manage your risk reward, and I pound the table on that all the time. I'm probably the only one really telling you that you need to have. Don't look at just the option pricing. So if you pay $1, right, and you make 50 cents on $50, so maybe on the option, look at what your risk was, because if it was the entire option, then that's less than 1-to-1. That's not good. If it was 50 cents stop, that's only 1-to-1, meaning you're not going to make any money trading. Okay, if it's 2.5 to 3-to-1, so if you risk 50 cents out of that dollar option and you made $1.50, so what you willing to get stopped on? 50 cents, you made $1.50, now you're talking. That's what and you should be able to hold that for that long. Okay, because or just say, listen, at the end of the day, I'm scalping, and that's fine too. There's people make a shitload of money doing that, but just recognize what style you have, because I find some people they can't even hold on to the profit. Instead of just rolling the stop up a little bit, they just want to take it off. I want to take it off. If you're a scalper, that's fine. If you're looking to swing trade or even day trade properly, you want to let your runners run. So that's my little speech on that. Apple is still trading sideways. Facebook actually broke down. So it continued. Again, we saw this very sloppy price action. Looking on the weekly, it still doesn't look that bearish on the weekly, quite honestly. I mean, from this pivot, if you want to say the pivot's here, and then you do this. I mean, this is how I look at things. As simplistic as it is, I'm saying, okay, we have higher lows in place from here, here. Okay. Sorry, my drawing skills aren't that quick, but you see the higher lows in place. So again, it would be something to be very careful with shorting, just because of that price action. Tesla really shit the bed. I mean, good Lord, I was not expecting this type of price action, especially this gap down. It's like a gap down like 12 bucks, and then it continued and closed lower. So we'll see how it looks. And again, it's still technically in an uptrend, but I wouldn't be buying this dip, I tell you that. And then this would be the pivot that I would be looking at, and it broke it. It gapped up and broke down. So if you want to look at it another way, you could say, listen, this was one high, and this is the other high. And I'm willing to take this and risk whatever this dollar amount is and go from there. So it's, I mean, on the weekly, it's going to be 30 bucks, but on the, you could still trade it weekly if you want. Again, it might be something you're just going to have to wait out. But keep these things in mind, and these are little, I think it's helpful. And again, the reason why I did this channel was to kind of help new traders and existing traders. It wasn't to get a lot of YouTube views. If I want to do a lot of YouTube views, I post, me working out, or, talking about some type of, Nicki Minaj song, or fucking Justin Bieber or something like that. That would get me hits. This is to be educational, and I hope you guys like it, and put some feedback on there if you can. Spread it, retweet it or something like that, because again, I'm doing this because I'm trying to share the knowledge that I have with people, that hopefully it could, because this was a hard, and it's still sometimes a very hard road, but at least if I can help somebody reduce their time to learn stuff, or kind of give them a little different perspective, it would be helpful, and I would like that. So take care, and be careful regarding these dips to purchase. Okay, maybe, again, I've been saying that maybe you want to keep your powder dry for a little while as well. That's what I'm doing until I get a clear sign. Take care.